Hi there, this is Informative Traders. Recently we used this chart on the website to explain our trading method, which looks at three key areas: price, volume and market structure. I recently traded this 5-minute chart of the US dollar Japanese yen, and I wanted to go over how we found the trade and the principles behind how we find our trades. Now the first thing you'll notice is we had through here we had a trend channel in play that was formed by highs in the market, and there was also a low off screen, as you can't see, which created our channel. And as you can see, price actually came down and hit the bottom of this channel. We'll get to that later. Okay, so first of all, we had our market structure. We could tell that the trend was down. We had the market was falling within this trend channel, and we were looking for trades. Now the first thing that I was alerted to, I started noticing volume coming in on these little reversal, 2-bar reversal plays here, and I was watching to see what the next step was. Now we had a supply line through here. Now as the market moved sideways here, and it looked like we might have been trading in a range for some sort of accumulation of price, and I was looking for either some sort of break higher or a break lower. And as you can see, then we got this big down bar and the volume started to increase. So there would have been a lot of stops taken out. People needed to cover that were looking long here, needed to cover in this area. That added to the selling. The next bar down, you can see this next bar down here actually had very high volume, the highest volume on the chart so far. And I noticed the close was in the middle of the bar. The next bar closed higher. Now that has to be a supporting of the market there. The smart money have come in and supported the market here. That's the initial preliminary support. The very next bar was another widespread bar on nearly equally high volume, and the next bar was up. So over the course of those 4 bars, we saw high volume down bars followed by up bars. So we had a preliminary support on the first 2 bars, and then as the market was pushed even lower, we had a selling climax. So at this stage, I'm now starting to look for the possibility of longs. I can see the market is being supported in this area. So once I saw the market being supported by the smart money, I drew a line across the top of the high volume supply bar we had. Now I'll look for longs once I break above that line and I see a signal or a retest to go long. After the initial support down in this area, we saw the market rally back up to the supply line, and if we look at the volume on that wave A, there was no volume there. So at this stage there was no demand to take it higher, so the market was marked back down, and you can see that the volume increased, so there was some more supply left in the market. But then as we notice wave B starts to make a run up, it breaks the supply line and we get an increase in volume. So this time we're actually getting demand for higher prices. So we look at the difference in wave A and wave B. Wave A moved higher on no volume and the market was then marked down, and then wave B moves up on increased volume. So now the supply may have been taken further out of the market and the price was able to move higher. Now the interesting part was then when we retested the supply line, there was a lot less volume in the market again. So we're seeing signs that supply is drying up, and this is where we want to start looking for longs in this area. We also had a test of the upper trend line in this trend channel. So price broke through and actually came back down and tested that area. So not only did we have that, we also had the test of the supply line. We had the volume reacting or behaving how we wanted it to, and we were looking for signals. Now, if you look at this bar that I've circled, as price moved off the supply line, the price was marked down on a small bar with a close in the middle, and the volume had died off. It was the smallest volume for probably a dozen bars, and it told us, it was the little key that told us that, hang on, there's no more supply. As they push price down, the supply is getting lower. Now, I took a break of the top of that bar, and as you can see, the price then rallied for nearly 50 pips. And I actually exited up in this area. So that was a nice little move. It was a 50 pip move. This pair actually moved a further 40 or 50 pips higher. So it turned out to be a very good rally. But it was all set up because we had the right components in place. The price had been marked down. I think once they saw this area here, there didn't seem to be much selling going on in this range here. They've marked the price down to pick up some more supply of the market, and then the price has rallied. So this was a great little setup. We also had the 20 moving average, 20 period moving average moving up. The trend was changing. The volume was reacting how we liked it. The bar that took off after the supply bar was a great giveaway. We had a wide range up bar closing on the highs and great volume. So we had bullish volume coming in and the price rallied. These are great setups. If you're patient in the market and you wait for a great signal, you'll be rewarded. You can see here that when price moved lower here and we saw the market supported, that alerted us to a potential trade. But you now have to be patient and wait for the setup to take place and the signal bar. So we saw these waves, we saw the retest, we got our signal bar on the low volume, we got a nice strong up move on the next bar on good volume, and we were in the trade. Once you're in the trade, you then have to manage it, and there's many ways of managing that. But the goal is to find that trade. You need to be disciplined, you need to be patient, have your market structure in place, and then analyze your price and volume. And when you get the signal, don't hesitate to go long. Have a stop under some of the market structure here, under the lows. Work out your risk and work out what reward you want from that, and take the trade. The best thing about a trading method such as the one we use is that we're not using any trailing indicators. We're actually monitoring the price and volume as it happens live in the market, and we're making our decisions based on that. If you can learn to analyze price and volume, and you can develop your trading around those aspects and wait for the best setups, along with risk, reward and money management, you can make money in this market. The best thing, it works on all markets. It's not just confined to Forex. It can be stocks, futures, any type of market and any time frame. This is just an example of a 5-minute chart. Those that may trade the market on these smaller time frames, these setups happen a lot, and if you're patient, you'll find them. This is how we traded Informative Traders. I hope you enjoyed it. There's going to be a lot more videos like this, a lot more setups. So come to the website, check out the videos, check out the market commentary, and yeah, make some money in the markets. Cheers, guys.